Some disagreement with the president on that statement. In fact, talking to economists, what they say is tariffs are the greatest at 1, losing jobs in the unprotected industry, 2, raising prices, especially on the goods affected by those tariffs, and 3, distorting economic decisions by businesses. Here's a really recent example, the steel and aluminum tariffs, which you can see all those companies around it have said they're going to add jobs. The ones listed there said they're going to have about 2,700 jobs, and the Trade Partnership Worldwide said they'll add 26,000 jobs. Sounds good, right? Well, let's go to the other side of the ledger. Those 26,000 jobs added, another 500,000 jobs or so are expected to be lost because of higher steel prices, which saps consumer spending and raises prices and otherwise reduces growth because of the higher prices. Let's go back in history and take a look at some sort of forgotten one. Obama's, I'm calling them flat tire tariffs. According to the American Enterprise Institute, 1,200 jobs were saved. 2,500 jobs were lost. The cost of the tariffs to the U.S. economy was $1.1 billion, and it cost almost $1 million per job saved. So note, by the way, that study is from the American Enterprise Institute, the same place that Kevin Hassett, the president's economic advisor, comes from. Sarah, when I talk to economists, they say the greatest was Muhammad Ali, not tariffs.
Well, Steve, just on a flip side, though, to that, one area you could say tariffs have worked, and this may not be therefore applicable to the United States, but it has been used and to positive effect for many emerging markets as they emerge, as their GDP per cap grows. And you'd have to say China over the last 2 or 3 decades is an example of that.
So when you have a developing country and one that is trying to establish industries, it can work for a while. But, you know, Wilf, I had the pleasure and sometimes displeasure of living in the former Soviet Union for 6 years, from 1992 to 1998. And I saw the results of protected industries. They're sclerotic, they're fat, they're anemic. I'm sort of running out of words here. But what happens when you protect those industries is they become uncompetitive. And that's one of the big dangers here. We had that in the United States when it came to the auto industry as well.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.